Federal employees, you're probably losing $500 a year and don't even know it. But what if I told you it's not from your paycheck, it's from your inheritance? That's right, if you've recently inherited an IRA or expect to in the future, there's a tax trap waiting for you. And if you're a federal or postal employee, you've got unique rules and options that you need to think about. At the Benefit Coordinators, we've helped thousands of federal and postal employees avoid costly mistakes just like this one. So today, I want to help you understand exactly what a tax on inherited IRAs really means and how to avoid losing money to it. So let's get into it. We at the Benefit Coordinators really enjoy creating this video content for you. If you enjoy it as well, would you please consider clicking the like and the subscribe buttons? Also, clicking the chime will notify you of our new posts. We'd like to provide you, at no cost, a copy of our e-publication, the Federal Employee Benefits Handbook. This is in our 13th year that we've done this for federal employees. It's no cost to you, simply request it of the Benefit Coordinators. Or if you prefer, you can actually go to Amazon and purchase it yourself. And now, let's get back to the video now that my car has been cleaned. First, let's talk basics. What is an inherited IRA? It's a retirement account passed down to you from someone close, maybe a parent or a spouse who passes away. And it can be a traditional IRA or a Roth IRA. Sounds simple, right? But here's where it gets a little bit tricky. You just can't leave it sitting there forever. And if you touch it the wrong way or at the wrong time, you could owe a lot more in taxes than you actually expected. And that's where many federal employees go wrong. They treat an IRA like any regular savings account, but the IRS doesn't see it that way. And the Secure Act made it even more complicated. Thank you, government. But not you, employees. Let's break it down simply. If you're a spouse who inherited the IRA, you've got a couple of choices. First, you can roll that money into your own IRA. Now, this option works best if you're under retirement age and you want the money to keep growing. Second, you can keep it as an inherited IRA and take distributions now and potentially use it to supplement your current income. But remember, if it's a traditional IRA, those distributions are taxable. And if you're not careful, you could push yourself into a higher tax bracket that means more money going to taxes and less in your pocket. Now, for non-spouse beneficiaries like children or siblings, it's a whole different ballgame. The Secure Act changed everything. You now have 10 years to withdraw all the money. That's right, 10 whole years. 10 years. Got it? 10 years. And then the account has to be empty. Empty. And here's the catch. There's no required amount each year, but if you wait too long and withdraw big chunks near the end, the IRS could actually hit you hard with additional taxes. So let's say you inherited $100,000. You could let it sit there for 9 years and then withdraw it all in the 10th. That $100,000 goes straight into your tax return. It could bump you into a higher tax bracket and actually cost you thousands of dollars more. Now, that's why understanding rules matter. So let me say this very clearly. This isn't about avoiding legal taxes, it's about planning smart so you don't lose more than you actually need to. You really don't need to, but you're going to have to because of taxes. But anyway, as a federal or postal employee, you've worked hard for your benefits and you already have a unique retirement set up with your TSP, your pension, and your FEGLI. And inherited IRA adds another level. And if you don't look at the whole picture, things can get really messy fast. And that's where we step in at the benefit coordinators. We know that your benefits are good and great, and we know your benefits inside and out. We're not just financial people. We specialize in the federal space. We understand that you've worked hard, and we understand what you are owed and how to help you protect it. Let me give you an example. We recently worked with a postal employee named Joe. Joe's dad had passed away and left him with a traditional IRA with $150,000. Now, Joe, not his real name, didn't realize he needed to take distributions within those 10 years, and he figured out he'd just wait and deal with it later. So we sat down with him, looked at his income, looked at his retirement timeline, and helped him create a yearly withdrawal strategy that kept him in a lower tax bracket. So by spreading it out over a full 10 years, Joe saved nearly $18,000 in taxes. And that's real money. That's money that you can take to Starbucks and tip the barista, okay? Money that stayed with his family instead of going to the IRS. And here is the truth. Most people just don't know about it. They don't get that planning for withdrawal thing at all. So even on something that didn't earn, it's just as important as managing your own retirement account. So take advantage of it. Now, here's what you need to know moving forward. Number one, always check the type of IRA that you inherited. Traditional IRAs comes with taxes on distributions. Roth IRAs may be tax-free, but only if the account's been open for 5 years. Number two, start with the 10-year rule. If you're not the spouse, you need to plan. Waiting too long can actually cost you big. Number three, pay attention to your other benefits. If you're getting FERS, TSP, Social Security, or other income sources, make sure you're not pushing yourself into a higher tax bracket without meaning to. Fourth, don't do it alone. Seriously, you don't have to. We're here to help. Every week, we talk to federal and postal employees just like you, hardworking people who didn't know there was a better way to plan. They didn't know that they could reduce taxes on inherited IRAs. They didn't know that they had options. And that's okay, because that's what we do. At the Benefit Coordinators, we work with you. We look at your full benefit picture like TSP, FEGLI, FERS, your family situation, even your future plans, and we help you build a strategy that makes sense. We're not selling products. We're about providing peace of mind, because no one should lose money just because they didn't understand the fine print. So if you've inherited an IRA or you think that you might someday, here's what you need to do. Don't wait. Start asking the right questions now. Talk to someone who understands your federal benefits. Ask us how this fits into your bigger retirement plan. And most importantly, don't assume that what worked for your neighbor or your cousin or your coworker is right for you. Every situation is going to be different. We're not just here when it's urgent. We're here to guide you through the whole process from start to finish. And actually, we like wiggle room time. 5 years from retirement is actually a good number. So before you make a move, before you withdraw your money or roll it into something else, call us or visit us at thebenefitcoordinators.com. We'll talk, we'll explain everything in just simple English, and we'll make sure that you keep more of what is yours, because you've worked hard for your benefits, you've earned a peace of mind, and we want to enhance that peace of mind, and we're here to help you protect it. So, in essence, I thank you for watching, and if you found this video helpful, share it with a coworker. Chances are they'll need it just as much as you do. And if you're ready to get started, or we're just one simple conversation away, you can visit us at thebenefitcoordinators.com and schedule a no-pressure consultation. We'll see you next time.